Let's get your thoughts on the strengthening of the Naira. Over the last 2 weeks, we've seen the central bank, I think it has pumped in about $2.2 billion to really strengthen that currency, and we've seen the impact. We've seen the Naira gain significantly. Yesterday, I think it closed at 150, just over 151 Naira to the dollar. What are your thoughts on the strengthening we've seen?
Well, what we're going to see towards the last quarter of the year is more like a battle between the buyers and the central bank's desire to keep the currency stable. One of the key factors that would decide who wins this battle will be the inflows that are coming from the oil sector, and particularly NNPC. One of the things that happened in the past month that caused the spike to about 155 was the fact that the NNPC did not sell at the time they normally sell. Usually we see about $300 to $350 million coming from the NNPC, and that didn't happen late September. That only happened sometime this week, which was one of the reasons why the currency strengthened. Now, what we see is that with the depletion of the excess crude accounts, that doesn't show a good sign. But again, we have to also bear in mind that the reserves are still relatively healthy. And I think the central bank has enough firepower to sustain stability in the currency. And as long as the NNPC continues to bring in money on a monthly basis, we should be able to keep the currency somewhere within 151 and 152. However, if the NNPC and the other oil company flows should dwindle towards the end of the year, then we might go back to the 154, 155 levels. But my bet is that we'll stay probably around 152 by year end. Okay,
I think the conservative estimate from the person I spoke to at UBA was 155 for the year end, but let's see what happens. Let's talk a bit about the bond issuance program of the Debt Management Office. And I think we've seen a little, should I say, conflict there, where we've not seen them stick to a program. We know usually they would announce a program at the beginning of the year, but obviously this year we've heard of bonds to finance the elections, we've heard of infrastructure bonds. What are you hearing right now concerning that bond issuance program?
Well, what has actually happened is traditionally what they do is they release the calendar just before the quarter. At the beginning of the year, though they hadn't released the calendars for the last 3 quarters of the year, they had verbally come out to say that they will probably stick to an issuance of a quarterly amount of about 150 billion. But what we've seen in this last quarter is that there's a strong desire for the federal government to raise more funding. There isn't much clarity as to where exactly the funding is going, but the key fact that needs to be considered is that the issuance has gone up almost 80%. So we expect that what we'd see in the last quarter of this year might even be up to what we saw in the first and second quarter. Now, this has significant implications to the yields, which we've begun to see. If you recall, earlier in the year, we were seeing 20-year yields at 9–10%. Now we've seen them go up about 280 basis points to 12.8. And the expectation is that as this issuances continue, by year end, we might see the 20-year yield as high as 14%, which in some quarters is good for the investor, but it might be a bit scary for those who have already purchased some of these long-term bonds early in the year, and they probably will be showing significant mark-to-market losses as we speak.
And let me pose one final question to you concerning the impact of AMCON. How do you see, obviously AMCON is likely to be in play in another few weeks or so, and that liquidity is going to come to the banks. What impact do you anticipate that would have on yields going forward?
Well, it's difficult to say now because the central bank or the new AMCON management hasn't come out to say the particular scenario as to how this thing is going to play out, because there are one or two scenarios in which it could play out. It could be a case whereby the assets are taken from the banks and bonds are issued to the market to fund this, or it could be that bonds are issued directly to the banks who they get the assets from. But the net effect of this is you have to remember that these banks also owe the central bank significant amounts of money. So there's a possibility that the net effect of this might be there might not be a significant inflow into the market, because on one side some of these banks have to make repayments to the central bank, and on the other side the central bank is going to raise funds through issuance of bonds. But we're watching that space. When we get some clarity as to how the central bank wants to go about the purchase of these toxic assets, then we'd be able to make a call as to how the effect is. But generally speaking, the way things are going, the way treasury bill issuances have gone up, fixed income issuances have gone up, we expect that there'll be a mop-up of liquidity in the coming year, and I expect to see much higher interest rates than we saw in 2010.